This conference will now be recorded.
So GRE, for example, is a test which has maximum 340 and minimum 260. Most of the banks require you to score at least 300, 35, or 310 to be eligible for an unsecured loan. GMAT is another competitive exam wherein you are required to score anywhere 650 or 700 plus to be eligible for an unsecured program. If you're looking at undergraduate, SAT is generally taken into consideration. So, so we you can you say that we will change the system? Give us a minute. We'll be resetting ourselves again.
Okay, students, we've been okay. It seems we're having some technical issues with the volume here. Uh, just a second. We will change the system right away and start the.
This
I hand
conference
over
will
to.
now be recorded.
Okay, so okay, okay. Um, so we are back. Sorry, apologize for the glitches again. Now, the first important thing is the student profile. So when you look at academics, I reiterate again that your GPA is the most important thing which matters. Once you look at GPA in terms of structure, your 4 years GPA does make a difference. And when you look at the 4 year GPA, you know, if you have certain kind of eardrops or certain kind of say KTs or that matter, they do affect the student profile coming in. The second thing which we were talking about was the GRE score. The GRE is an entrance exam between 260 to 340, where most of the financial institutions require a GRE score of 300 plus. You have the GMAT, which is required for any student who's pursuing MBA. So you would generally look at a GMAT score of 650 plus or 700 plus. Those are the ones which are important. In terms of country and university, if you're looking at unsecured loan, play a big profile. So every country or every financial institution has a different risk between the country and university. So, for example, if you have two students who have the same academic score and the same GRE score, and one maybe is going to Ireland and the second one is going to the US, you will notice that the guy going to Ireland will have, say, about 15 lakh rupees of maximum unsecured loan versus the person looking at the US of 40 lakhs. Whereas the university and country is this is sim country is different, but universities of a different stature. Now, by stature, I mean a similar sort of QS ranking. So these are things which you have to consider while looking at unsecured loan. In terms of course and work experience, you have the course is important. So broad classification of the course would be STEM, which means you're doing a science, technology, engineering, mathematics program. If you're doing a STEM program, you have higher chances of getting an unsecured loan. If you're doing a non-STEM program, which means you're doing something like humanities, something like marketing, something like arts, these courses generally do not have options for unsecured loans. The third option available is the MBA. Now, if you're looking at business management programs and among the top Eduloan programs in the world, you are mostly going to get and looking at or be eligible for an unsecured loan. So these are things which are important while you look at the student profile. So among between the student and the co-signer profile, I guess student profile is the most important, which you should look at, and this is one thing which counts a lot while deciding for any financial institution whether you are eligible for an unsecured loan. Now, in terms of cosigner profiles, now cosigner is basically a particular person like the parent who is ready to stand as guarantor and co-sign or be answerable to the loan. The most important thing is the source of income. Could be as a salaried employee or as a self-employed, could be retired, or could be some other sources such as okay, rental income or other kind of mutual funds, etc. Now, when you're looking at, say, for example, a retired person, although he might have a good retireable income, but when the financial institution looks at the eligibility parameters for an unsecured loan, they might not consider, in case your parents are retired, they would want some sort of salaried or self-employed, and they will be looking at some visibility. The visibility basically is um, the amount or time your students or the parents have until retirement. So typically, if you have somebody who is about to retire in a year, he might not be eligible for an unsecured loan, and somebody who has about 8 to 10 years of a payment or 8 to 10 years of working left, or he has a job left, would be eligible for an unsecured loan. These are important points to consider. Now, in terms of sources or other sources, it's important to prove that these sources are regular, which means it cannot be a one-off case. So, for example, you cannot have a situation wherein your parents received some income because of say grandparents or their demise or some sort of property or family split. So those kind of incomes are not considered. Those the ones only considered are regular incomes which are there. The other one is the IT return. The IT returns are basically the actual IT return which you file. Now in India, there is a gray area towards actual filing of IT returns as well as actual income. So when a bank or any financial institution looks at IT return, they look at actual taxable income which you have declared on the paper. Especially this especially creates a problem for people who have their own businesses or self-employed. Kindly note that it is not the turnover of the company which matters here. It is the income which you have obtained from your company. So we have many students who come in and their parents say, "Oh, I have income of 40 lakhs, or I have a business, I have a shop which has an income of 1 crore." Now, very important here to note that 1 crore is the business income. All the banks will be considering the net income which is required. Now, the second thing which comes into consideration is the additional co-applicant consideration. So sometimes it could be that both your parents would be working, or else single would not single applicant or single parent might not have the financial justification to take a loan. In this case, both the parents' incomes are considered, and once considered, they are taken forward. Now, a very important point here is suppose your parent is say a tuition teacher or has done home tuitions, or your dad is maybe a diamond merchant. Now, in for a bank or for a financial institution, there are certain negative profiles. I would want to say that even certain government profiles or certain positions of authority, for example, are treated sometimes negatively by the financial institutions because the enforceability becomes an issue. So, for example, we had a case last year wherein the parents, the co-signer was his uncle, who was basically a police officer. The bank or the financial institution kind of not refused, but were very reluctant to provide an unsecured loan to the child because they said that it would be tough for them to recover the loan from a police officer and enforce the loan on it. So those are things which you have to take into consideration, which get affected during looking at the loan. The third thing obviously is the CIBIL rating. Now, what is the CIBIL score? Now, CIBIL score is basically it's like a score sheet which grades you based on your past credit history, which means the past loans you have taken. This includes the credit card loans which you take. So many of us do not consider or do not treat the credit card loan seriously. I would advise all parents and all applicants to look at this quite seriously because this affects your score. And this CIBIL score is one of the parameters. So India is moving towards a central repository wherein everybody is graded on a side of a CIBIL score. And this is very important. So from the cosigners profile, which the financial institutions look to have an unsecured loan, you have all three: the income or the source of income, the IT returns, and the CIBIL score, which make an impact or help look at impact on your education loan. Now let's delve more in details. This is basically, now it is tough for us to categorize all 14 players on the platform. So what we have done is we've made a broad classification of various parameters. Spend some time on taking through the parameters on the left side, left column. And on the topmost row, you would have 4 categorizations which are done. So those are private banks, those are one. NBFCs are any kind of non-banking finance corporation. So they include Credila, Avance, Incred, Oxilo, even for that matter, Bajaj. The international funds are basically looking at the funds like Prodigy and Empower, and you have US banks who give the loan. So coming into the point of view, the first criteria, which is the most important, is the loan amount. Most of us are bothered about the loan amount. So private banks give maximum up to 40 lakhs of unsecured loans. NBFCs give maximum 50 lakhs, but it's point to note that generally the range is between 30 to 50 lakhs, and it heavily depends on competitive scores and other factors. So if you are a good profile, which means you have a very high competitive score, GRE is excellent at about 320, 330 odd, and you have good parental background, you are eligible for a higher unsecured loan. So the next is the international funds. So here, Empower funds maximum up to $50,000. Prodigy funds maximum up to 100% of I-20 value. So both have their criteria. Here again, based on the consideration of the university, which is the basis consideration, they vary. So better the university, you would have a higher chance or more percentage of attendance as compared to a more eligibility for a higher loan. US banks basically fund 100% of I-20 value and maximum $150,000. So you don't have any kind of issues in terms of loan amount if you're looking at a US loan. Now, the second point I would say is the most important point you should look at in the presentation. So the private banks have a list of universities. So for example, ICICI and Axis both have a list of A, B, C universities, and they categorize the universities and courses, and based on them, they give you the final sanction. So you could have these university lists are generally private, so you would not have public access to them. We at Eduloans can help you, guide you on these lists and take it forward. The NBFCs, for example, have a wider spectrum. So they heavily rely on the GRE score compared to the university and course. So they're not typically university or course dependent. They have GRE as the prime requisite. The third thing based on international funds is again they have a list of universities. So both Prodigy and Empower have the list of universities and courses they fund. If your school or college of education follows in this list, you would be able to get them. Then the fourth thing is the US banks. So in terms of US guarantors, they would be able to, there the list of universities do not play there the universities do not play a role in such. They have to be just a bona fide university. So you have a very wide scope of universities if you look at US banks. So the third thing is, which is I guess the most important financial parameter, is the interest rates. So interest rates is say now this is important here. Most of the interest rates, if you see across the board, is between 11.5% to 14.5. It's a negotiable interest rate. Primarily depends on the student profile and the cosigner profile. Based on these two things is what our rate depends on. That's the important thing. The better the cosigner, more the earning, better the CIBIL, better the IT returns, long steady income, the higher, lower the rate of interest. In terms, international funds look at have a fixed kind of a rating system wherein Empower follows a rating system of about 11.99 and they reduced it to 10.49 after successful passing out and completing a job. In terms of Prodigy, they also have a kind of a flexible rate based on LIBOR. Now, LIBOR is something called London Interbank Offer Rate. It's the rate at which the dollar fluctuates globally. So that's what they do, charge a premium, which is LIBOR plus some 7-8% and take it forward. In terms of US banks, the rate of interest generally 4 to 7%. Here it could be fixed or variable. It could be as well, depending on the tenure, the rates change, wherein it's a 5-year loan or a 10-year loan or a 15-year loan. Based on how you're going to repay the loan, which means that if you're looking at immediate repayment or an interest-only repayment, or maybe say a full deferment after the program. So those are factors which play an important role while deciding the interest rate. The fourth thing is the interest paid during moratorium period. Now, what is the moratorium period? Moratorium period is the period in which you are going to study. It's those 2 years of study wherein you're looking at not earning during those two loans. Education loan is one of the only loans wherein you would be you have a concept of moratorium wherein you are required, or it is as per the understanding that you would pass out, get a job, and repay the loan. It's not your parents who are going to finance you in terms of repaying the loan. Now, most of the banks do have some sort of flexibility. So, for example, the private banks do not have a flexibility for moratorium period, which means they charge the interest amount payable and amount is to be disbursed, the ones which get disbursed in tranches. NBFCs have a partial payment scheme wherein they can choose to have partial repayment. That's the other thing which matters. Now, in terms of in terms of international funds, Prodigy and Empower both function differently. Prodigy has a flexibility, whereas Empower does not. US banks have the flexibility available as per choice, so that's very much there, and you can choose to pay the entire loan after you graduate. Now, after the moratorium period, when do you start paying the loan? That's the critical thing. So if my course ends maybe 2 years, when is it I have to start repaying the loan? So for example, in private banks, generally 6 months. So post the course, you would get 6 months wherein you would be looking to complete it. In the NBFCs, they are slightly more flexible. It is 6 months to 1 year. So you could have a scenario wherein you pass out in 2018 and you are searching for a job, and you can start to pay a loan in the end of 2018 or maybe in the next year, 2019. The third thing is international funds, both Empower and Prodigy. They immediately start their EMIs after 6 months after class ends. US banks also very similar to 6 months after class ends. So moratorium is a very powerful tool and a very important decision maker for unsecured, because many of us have parents who are unable to give. So if you look at a ballpark figure about 40 lakhs, you would have a monthly EMI about 50 to 60,000 rupees, which is very high. So the interest payment itself would be approximately anywhere between 30 to 35,000 rupees per month on a 40 lakhs disbursal, which is at the rate of about 10 to 11 to 12%. So this becomes an important parameter for discussion, and all of you are advised to look at this very clearly while choosing the best financial provider. The third thing, the last thing on the slide is basically the income tax benefits, or ATE benefit. ATE benefit is basically a benefit provided to your co-signers, which means your parents, and they are able to deduct the interest paid on your loan from their annual income. So for example, if your parent is earning say 6 lakhs a year and your net interest income is about 1 lakh, so your net tax payable becomes about 5 lakhs. Private banks, you are able to enjoy this facility, and you are eligible for an income tax benefit under ATE. In terms of NBFCs, the only NBFC eligible is HDFC Credila. The rest do claim to have some sort of an interest certificate which can be used by the CAs. International funds and US banks do not have any kind of ATE tax benefit. However, there could be some sort of tax benefit to the US users, because their income or net income might get deferred. The After the interest rate, the most important thing is the processing fees. So in terms of processing fees, most of the here again, I would say the advantage would go between all these four players. Probably the US banks, because they do not charge any kind of processing fee. It is our service charges which we charge at 1% at Eduloans. However, the banks do not charge anything. The second competitive obviously will be the private banks, which charge between 0.75 to 1% plus GST. They do have slabs which you look at. So they have a slab system wherein certain fixed amount up till 20 lakhs, post 20 lakhs a certain percentage, post 30 lakhs a certain percentage. The exact calculation for us is hard to define, but they generally is around that range. The NBFCs are high on interest, high on processing fees with Gen 1 to 2% GST. Now, this is where is important is this is all upfront payment. The third are in fact the highest. So both Empower charges about 5% of loan origination fees is what they call it. Prodigy charges 3% of loan origination fees, but they play it smartly. So what they do is, in some occasions, they amortize it, which means that they split the payments in equal adjusted small tranches and choose to pay along with their EMI. So those are the things which are important. In terms of turnaround time, I would say the ones which are online. So among the online, US banks are completely online. In terms of Empower Prodigy is completely online. So they're definitely faster. In terms of say between the private banks and NBFCs, both take the same time because both have physical documentation and paperwork, but they're very effective. These are 4 to 8 days. What we have written are actually working days, which means typically takes about a 2 week time frame to look at it. In terms of margin money, now what is the margin money? Margin money is the amount of money you have to put apart from the student, apart from the financial institution funding it. So in terms of, there is a 15% compulsory margin money for unsecured loans from private banks. NBFCs generally they do not have the concept of margin money. So how much you require, but the top up is whatever 40 or 50 lakhs. So the concept does not exist. In terms of Prodigy and Empower, there is they can fund up to 100%. The remaining becomes margin, or for Empower it's about $50,000. The remaining become margin money. So the important aspect is that during the sanction, all of these players, the margin money needs to be proved that it exists, which means that you have to have a bank document or some sort of FDs or a bank statement or even liquid assets like, say, for example, shares or mutual funds or PPF, etc., which can be proved, which can prove that you have readily available money to fund the balance amount of your education. For the US banks, they don't require anything because they fund up to 100%, so that's not a requirement at all during the time of application. Now, what is the CIBIL score of cosigner? So typically, private banks require high CIBIL score, which is 720. So they require a 720 CIBIL score, which means they require the cosigner to not have any kind of overdues or any kind of payment delays or any kind of bankruptcies in terms of those things. HDFCs, and other NBFCs have generally lower criteria, but 700 plus. They do go lower if the student profile is good. In terms of Empower and Prodigy, do not require any kind of cosigner profile. They do intend to, however, take that is not an intentional defaulter, but in terms of cosigner CIBIL score, there is nothing which is mandated. The US banks require a US citizen and they require about 700 odd. So the maximum tenure, another concept is how much time can you take the loan? So the maximum tenure is up to 15 years after completion of the program for private banks. It generally varies between 10 to 14 years for NBFCs, varies 10 to 20 years for Empower and Prodigy. Here for US banks, average is 7 years. However, there is between 5, 10 to 15 years. So that's how they do it. So typically, tenures are in the range of 5 to 15 years, and this point to notice that most of them do not have any prepayment fees, which means that you can pay as early as possible. Another thing which we choose to ignore is the currency conversion charges or transfer charges. So, for example, an average transfer between here and the US will cost you anywhere between $20 to $50, depending on the layering of banks you use. And in terms of conversion, you would be costed 1 or 2%. So you look at it that it is expected that you're looking or working in the foreign currency, so your loan will get sanctioned or disbursed in rupees. It will get converted to the foreign currency, which will then be used to pay your tuition or living expenses. Once you graduate and you start earning, you would be earning in the foreign currency, and you would be repaying back this loan, converting the foreign currency into rupees. So in both the cases, you are twicely losing. So this cost adds at least about 2 to 3% of your overall cost. So both sides of town are very important. So please have a look at them. So for NBFCs and even for private banks, they exist. For Empower and Prodigy, because they are mostly in US dollars or the currency of study, you do not have these kind of charges. Point of service, I did highlight in a previous conversation that they are dedicated RMs for both for private banks and for NBFCs, whereas the other two are all online. So you do not require any kind of help or in terms of dedicated RMs. The additional charges required are basically franking charges, which means that your documents get franked in terms of looking at it. So in case you are looking at non-unsecured loans, the franking charges actually do not exist. However, there are sometimes the power of attorney as well as the checks on it, so which are unsecured or which are unsecured things, they might get franked. So that's important parameter to note. In case of Empower and Prodigy, nothing. They do not take any kind of security or intangible security, as how I would call it, or personal guarantees, etc. So that they're pretty safe of, so you don't have any additional charges. In terms of prepayments, again 6 months. So also most of the, so here again the private banks and NBFCs have a 6 months kind of a prepayment thing wherein you cannot repay the loan in 6 months, post which you are fully allowed to prepay the loan. So that's the thing which is required. Now, then the next concept is very important to know is the insurance. Now, insurance is basically something like a key man insurance or a life insurance cover on the student. Most of private players and even Empower and Prodigies and even all of them take insurance. Now, what does insurance do, or how does it safeguard you? Now, when you take an insurance, you're basically guarding yourself into any kind of event which the student might occur during or after the study. So, for example, if something happens and student does not do well, or student actually, he faces death in terms of whatever accidental death, etc., the parents are not required to repay back the loan. In this case, generally because in terms of the origination fees which is charged by Empower and Prodigy, they do have a life insurance, and they do not, but however it is not independently mentioned, and hence we have put as not required, which means it is not there. I hope the above analysis was detailed and would throw insights into what will suit you better. We at Eduloans endeavor to provide the most convenient options. We are a free platform which completely and all your things are guided for free. We have dedicated financial counselors who can guide you, and they're available a call away. So that's very important. It's a digital platform wherein you can choose to compare and according to your requirements. Most of our channel partners have this service, so it's an end-to-end solution. It's just not a lead sourcing or just not a somewhere you can go on shiksha.com and just put in a lead and you'll get a random guy calling. So that's not how that happens. Try to make it as hassle-free, by giving you insights into what is how you by giving you eligibility checks, by giving you a list of documents, by giving you application forms, etc. So that's our endeavor so that it's a full solution. Uh, the important thing to know is we are in touch with the sanctioning authority. So if there is a delay or anything by the bank, or in terms of any clarifications which can augment your loan, all of them are taken in and are reported to credit, and that information is built on. The last and the most important is that we also help in issue of sanction letters, wherein we can call up the regional representative of the banks and fasten the entire loan process. The disbursement process, now here it's important to note that there are certain documentations involved in during the time of disbursement, and we help you during that as well. So any kind of clarifications which you require on disbursement, what kind of documents are required, where to get your kind of signatures done, where to get franking done, etc., all are taken into consideration. Thank you for your valuable time, and I apologize for the initial hiccups. So we are ready to take in questions if any, and look at solving your best doubts if possible. So Tanmay, can you put on people who can ask questions? You
Yeah,
can
yeah.
make the audio.
So the students attending, you can post your questions either through the chat feature available towards the top right, or you can unmute yourself and ask your questions directly. Uh, from the chat feature, we've received one question. Can
Mhm.
postgraduate diploma get unsecured loans for Canada?
So postgraduate diploma can get unsecured loans from Canada, but it becomes a tough bet in case it's a university or master's program. Generally, colleges are not supported by any institutions in terms of looking at unsecured loans, but universities are definitely supported. The second question again by Aniket Bindu, where the Eduloan stands in these four categories. Okay, so very important, Eduloans is a platform to guide and help the students. So it does not stand in any of the four categories. We are basically giving you all the four options, in fact, all the options available in the education loan space, and guiding you to the most appropriate option for yourself. So that's where we are located. So it's not a single kind of body, or we are not actually a NBFC. No. So, okay. So now this is a kind of, it depends on lender to lender. So the initial reaction is no, which means that the guarantor may not be a blood relation to the student. Now, generally what happens here is, in most of the financial institutions, they require one of the guarantors to be the parent. So, for example, if your parents, if your dad or mom, one of them becomes a guarantor and you are falling short of, say, the IT or requirements in terms of their, you can add in another guarantor who might be your uncle. Now, first of kin is generally considered an important parameter, post which you can add any other required guarantor on board. In terms of US banks, you don't it does not require you to be a guarantor or blood relation. Now, even in terms of NBFCs, so Credila insists on getting a blood relation. However, but others do not. So you have maybe Incred Auxilo who do not consider blood related. Aniket, if you are looking at loans against FDs, it's absolutely beneficial because obviously you just pay 0.5% or 1% over the FD. My suggestion hereby would be, if you're looking at FDs, you can actually break those FDs and take a loan. Repay. Why are you even willing to pay 0.5% annual fees, against FD? It's like going to the bank, giving them money, and then asking them for the loan again the same money. So it's actually not, it's simply, how would say, it's beneficial, but not practical. Okay, if there are no other questions, I think we'll end the session and both Aniket and Ayapan, we can look at addressing your queries in person. So we will have people who would be coming in. You would be getting, please note the following below numbers, and we are ready to help all your friends as well. Our contact numbers are 900408274, and the other one is 810490970. So they are looking at those. Do we get funds while in home country or after reaching destination country? Now here, you do get funds in home country. This is called the pre-disbursal. Many NBFCs do have that facility wherein you would require money for visa purpose or showing for the visa purpose, and you want a pre-disbursal funds. So they do that. Empower, Prodigy, as well as US banks, all of them generally only fund or send the money directly to the university. The private banks also insist on sending funds directly to the university. They are not so fond of a pre-disbursal. NBFCs do. So that is definitely possible. The interest rate starts from immediate as to withdraw the loan. So, but however, it's only on the disbursed amount. So, for example, if your sanctioned amount is 40 lakhs and your disbursed amount is 10 lakhs, the interest starts on 10 lakhs. It does not start on the sanctioned amount. It starts on the disbursed amount. So there is no, the sleeping time is only the time for repayment. So what you call as moratorium period is the time for repayment of the loan. It is not that during moratorium no interest is charged.
Okay, I guess if there are no more questions, we can end the session today.
Thank you, all of you, for being the audience, patience audience. Apologize for the initial delays and hiccups. We will continue our web series sessions across every week on Saturday, and hope to connect with you on various platforms as well as through our calling and take it forward. In case you have any queries, you please feel free to reach out to us on the below numbers or on support ID, and we can take it forward. Thank
Right.
you.
Thank you, everyone.